Friday, December 15th, the end of the week before Christmas. So next week, we'll start to be getting into the Santa Claus Rally. Again, I will detail to the minute exactly when on Wednesday and Thursday and Friday, we'll be starting to buy long for the Santa Claus Rally, which has a great track record. I'll show you. 2 years ago was in particularly a great 2-week period. And the Santa Claus Rally, you usually get out in the first few days of January, and that's it. Now, it's 10 o'clock California time. I usually start out with the stock market indexes. And again, we have a market that is overbought in the stock market indexes across the board. Slight variation in what's been happening lately. We are now lower on the day by 2.5 points on the spider, down a little bit in the DIA, 68 cents, and still up on the QQQs, which of the three indexes is the only one that was able to make a higher high today than yesterday. The DIA and the spider didn't make a new high, which we have been seeing happening again and again and again and again for about a week plus. In fact, now that the Fed FOMC meeting announcement rates are going to stay stable, likely, and they even so go down next year a little, is out. That news is out. The markets move on anticipation, reverse on realization. I think they're in the process of reversing back down. It is not the beginning of a bear market, in my opinion, by any stretch of the imagination. It is a minor downside dip into the beginning of the Santa Claus Rally next week. So I'm only expecting several days down, and then new highs completely for this longer-term bull market, still very much in progress. I see no long-term top at all. We are at some very important places. This happens to be the March futures contract, so I can't go back in time far enough, but we'll be looking at the continuation contract, and other cash indexes are the same as well. So we got to resistance levels on the March ES and went through it for 2 days worth, substantially. That represents now the first significant area of support, which is not much of a dip. It's not even, well, it is just barely getting to the low of Wednesday, let alone the low of this week on Monday, down to 46.50, which is really the first area of support I think we're going to get down to in the next week or two, at the most 2. There's the possibility of 4,600, and we'll see if we get to those levels, if I can justify any more weakness, but that's pretty much it. And then up, next chart, we got the spider, which of course is the S&P 500, but here we can go back for decades, approximately 3 decades to when it was started trading. And we see the prices have gone up right close to the historical highs we made last December and January, depending upon which index you're looking at, before the bear market of 2022, which bottomed out on October 13th, 2 years ago, with a bullish engulfing ER buy signal, and started to go right back up again. We got a sell signal on the last important rally high, July 27th. The correction stopped on October again this year, October lows again. That's over 90% of the time in the last 30 years we've seen a low in October worth buying, and this was absolutely a big buying opportunity. So overbought conditions imply that the market is about to have some sort of a decline. It could be terribly profound. I don't see that. It's not in my cards. And a minor downside dip into support. One of my first objectives would be 454. Only in a week or so. Next chart. Spider 1 minute has been slipping here since about the middle of the morning. And we've seen some minor new lows, but not a new low for the day yet. And if we start seeing a new low lower than today's lows, we're going to start to see some more selling coming into this market. There isn't any support of any amount to speak of below today's lows until you get down to 465 and we're 69.5. So that would be down 6 or 7 points. Not out of the question, maybe a little bit of a reach for today. And the daily data chart on the DIA. In the news, you've heard maybe that we made new historic highs, and that's for the Dow Jones Industrials. And we are above the high on January 5th, I believe exactly, that began the bear market again of 2022. So that we do have new historic highs in the DIA, but nothing else. And the Dow Jones is 30 stocks, the big, strong industrial major companies. And it's important to know what it's doing. But today, more likely than not, people follow more closely the SPDR, the S&P 500, the E-mini, NASDAQ, as the advertisement used to say, the new stock market some years ago. Anyway, this is overbought. It is a new high ground, but only for a couple of days so far. And I think it's about ready to come back down into that trading range that we've seen before. Right now, it's just plain outer space, new high ground. So correction, yes, back to maybe 356. Next, the Russell 2000 has some very profound things happening the last couple of days on the way up. If you look at the, whoa, didn't want to look at that one, and I'll pull back the Russell daily data chart again for you, sorry. And if you look at the longer term picture here, you can see the Russell really had a big sideways trading range that essentially started April of 22. And that is now being challenged, the highs of which, some of them, we've already overcome in the last 2 days. Now, zooming in a little bit, this is the January of 22, March of 22 rally highs, the red line, dashed line. We've gotten through some resistance areas. We've actually made new highs since this overbought condition of August of 22. So now it's been over a year. But darn it, we got overbought again. We're actually very close to the low of yesterday right now. It's going to be a dip or a decline to close the gap at first. And then I think probably back to about 187, somewhere maybe a little below there, but in that ballpark. In a few days, we'll see it turn back up and continue to go higher. So the long-term major development is going to be when we get above 209 at 27. Well, that's actually not exactly that number. It's a hair higher, but definitely around 210. And again, we're 187, 196, pardon me, at the moment. So it's not that far away. We just came in 2 days up from 88 and 2 days to 200, 12 points. So dip and then new highs. Next chart is the Russell 1 minute. I'm not on the same series that I was before. The QQQs have reached important levels also. And doggone it, I'm not doing very good today. Gotten overbought also. And challenging and made yesterday and a little bit today higher highs than way back in November of 21, which at the time was the historical highs. Then you've got your bear market of 22, and then you've got today and yesterday. Not that it's going to turn down for months and months and months to come starting now. Again, I don't believe that to be the case. We've got a gap to close in the Qs. That's a good tool to use. 380, 379 is what I'm looking for the next downside correction, and that's about it. All right, now I'm going to go to the futures markets. And E-mini from a different perspective, we're back a little bit below yesterday's range and lower on the day by some, not a tremendous amount. Closing below yesterday's low would help my story and expectations. and a minor correction is what I'm looking for. Next is the NASDAQ. Pretty much the exact same story, but this one is the continuation contract of the NASDAQ. It is not specifically the March futures of this coming year. So it is not that close to its all-time historic highs, which we, of course, got a bearish engulfing sell signal on November 22nd of 21. And we got a buy signal at the very bottom of the market on October 13th of 22, with an auxiliary buy signal near the lowest low January 6th of this year. So we've had some fantastic signals, including a bunch, some that didn't work on this chart time frame. All this looks like is overbought at historical resistance and the likelihood of a correction. I'm going to say on the continuation price is 16,340, maybe down to 15,955. Next chart of bond futures. We got to my objective, the green resistance area. We are overbought. This market looks a little like it's running out of steam today. And after two big, strong up days, no surprise. Now, when this correction happens, and I'm pretty sure it's about to happen, I'm looking for a test of the support area, this red zone again, and then back up to higher levels. We had been long at the bottom, ER buy signal, green right there, and stopped out a few days ago, unfortunately, but a darn good trade. And you can see my trailing stop is a yellow line under the lows as time passes. This is also tracked on a 1-minute chart. I don't show you that. Minute by minute calculated and moving if need be. So a lower close today in bonds would look very interesting to me. And if we get below yesterday's low, which it does not look likely, but it could still happen, we will have a red sell signal, a bearish engulfing, one of my favorites, bearish ER sell signal, which would almost, but not, I can't tell you it's for sure, but highly likely to produce a move down to where I just talked about, 117.20 into the red zone. Next chart is 10-year notes. We are still long 10-year notes from the bottom of the market, like we were from bonds. We had a buy signal almost on the exact low day. And we are still in that trade. And it has now reached officially yesterday my minimum upside objective of 1223, 112.23, like I talked about way back on November 27th. That was my prediction. It's now come true and overbought. So along with these comments from other charts that are affiliated with each other, I think we're starting a correction, probably back down to 409.25-ish. Next chart, crude oil in support and oversold Wednesday is starting to rally. No surprise. Said the same thing earlier this week. So now I need a close above the high of the red zone here in order to be a little bit more convinced that we're going to go all the way up to the next resistance zone. And that is up here. I'm putting the little marker rectangle over to the right, so it's more current. And that's my upside objective. If perchance I'm wrong and it starts to close below the red, it could easily drop off to these lows down here. But that's not expected at this point. Next, natural gas, same kind of story, looking pretty good. It has now come back up and closed the gap very accurately that I talked about a few days ago, every day probably. There's a gap to come back up and close, and it just did it, past tense. Now, that is a reason a lot of the time to say the market rally is over, the bear trend is going to persist, and the gap is closed, and down we go, which is possible. But we got so oversold and went down so much, so long, I doubt it's going to stop here. I'm actually looking for the potential of 3.070 or so. And that's going to take a couple, 3 weeks, 4 weeks. Next, heating oil has already started to bounce, got oversold at a support line. New high for now about a week and a half, and starting to get right back into the same, what used to be a support area, and I'll pull it to the right here, and now it's going to be resistance. So it stayed too long and got down too much further than the previous support area, which it bounced off of and bounced off of, bounced off of. Didn't hold this last time, stopped on a rally, made new lows again, and now is back up to a little higher than the beginning of resistance was where it stopped a few days ago. So what do we got? Maybe a move up to about 2.7, 2.78. Yeah, very plausible. I can't rule out, no, I don't know, 2.87. We'll see what happens, but I think it's going to carry further for at least a few days, maybe a week or more. Next chart. Gold had a bullish engulfing on Wednesday. It was not an official buy signal, and I pointed out that it didn't get oversold at the time, therefore we didn't turn green like at the bottom on October 6th, like almost on the high, like that's a reverse signal, that's not good. Like on this low and this high and this low back here and that high right there. By the way, if it didn't occur to you, these signals are also good for trading options. Let's think about that for a couple seconds. So the rally has happened. We got back up to resistance and threw it a little bit on the gold market. This was such a powerful, unique sell signal. I'm still basically looking for new lows again. And now, out of almost oversold conditions and a little bit of a friendly signal, it's a bullish engulfing, they're supposed to produce a little bit of a rally, not necessarily a major turn for months and months to come, but sometimes they're modestly and very minorly friendly. And so far, that has been the case for 2 days. But again, the bigger picture is big problems. I think we could be turning down very soon. Next, silver. Should be, could be, and looks like it is the same story. Slightly higher high. Did not have a bullish engulfing yesterday, closed lower instead of higher. It was an outside trading range. It was in support, and it was oversold. If we had had a higher close yesterday in silver, I would have had a green ER buy signal flat out, like down here. Do not make the assumption the rally could be just about as good or better. That was very spectacular and unexpected. Back here on my recordings, if you listen to the March 10th of 23, I was probably bullish at the most up to here, 24.3. Instead, it did double that. But we got sell signals on both highs of a double top. Unbelievable. I don't make this happen. I just notice that this happens too often historically and have developed the trading system for it. Now, I'm still basically bearish like gold. Anytime we could turn back down, we might have an outside down day today with a lower close. It won't be an official sell signal. We're nowhere near overbought. But it looks to me like it may be turning down again. I can't be very sure. I got the bounce. I got the price level at which it started. And I sure as heck got the beginning of the move down. Right here, there's a little too much ambiguity to be as certain as I'd like to imply. We got to resistance, stopped, told you it might turn down, it's turning down, platinum. And here's the first vestige of support right where we are. Not that profound. Next stop on the downside should be about 888, 888 and change. Below that, you've got approximately 840s, low 50s. That's where it's heading, in my opinion. And then another support area at 830. Frankly, all of these could be reached, but the numbers I came up with are bouncing levels at which the market could very well bounce for a short, 2, 3, 4, 5 days or something. High grade copper between a rock and a hard spot. Not sure what to say next, except I'm waiting for something more important to happen. Otherwise, it's just going sideways. Next, soybeans buy signal on December 7th worked out for 2.5 days very nicely, but we are almost stopped out of the position trade, ACR3, and it's losing a little bit more of its profit today, but still slightly profitable. Nothing great, nothing to write home about. And I wished it would start to get up to, say, 325 at least and close. I'm really looking for a close above 344. That would turn this buy signal into a much more profound one. And it's not out of the question. It just doesn't appear to be willing to do it at the moment. But I'm not out. There's our stop. Next, bean oil. Incredibly great long-term bear trade. Trailing stop, head and shoulder top, the head of which was a double top, and we got a sell signal on the highest high, the second high of the double top. Fantastic. Minimum downside objective on the head and shoulder I just mentioned was 50. We got to 48. It's going sideways since. The trend is now down. We've had a lower low today than everything except the 3 or 4 days that it bottomed out at the end of October and the beginning of November, about a month and a half ago. I'm still bearish. I think we're going to make lower lows, and I cannot rule out a move all the way down to 40. 49.5 at the moment. Next, soybean meal may have developed a broad double top. Very broad. The first high that was made March of this year. Way back here, now November of this year, we have another high, but it couldn't hold it. The closing prices were below the previous historical high after getting through it. And that is not a good sign. And I said so more likely than not on that day. Big down day the next, and it kept on coming. Rally failed. Kept on coming, got oversold, rallied now back up to a little resistance, and then it kept on coming down, new lows again. Last rally this week failed. See new lows on Wednesday of this week, and we're going sideways today. Yesterday was up just a slight bit. This is trending lower. We are at a support level, and it's possible it's turning up, but I'm just not seeing it. I think we're going to break below 398, 399 on a closing basis and come down next to probably 360 to maybe 340. Next chart, we got corn. I'm looking for more weakness. We're stopped out. We had a small profit for over a week and a half or so. A little disappointing that it didn't turn out to be much a better profit, but we never got a big rally. I told you in the very beginning, after the buy signal on the very bottom, that this is a bear market, and bull signals and bear markets should be taken with a grain of suspicion that they're not going to work all that well. It didn't. We haven't failed completely yet, but I think we're going to see new lows. Let's watch to see what happens. Wheat, same thing, but didn't get a signal on the bottom. Got to resistance. Looks like it's turned down nicely. And yesterday, a little rally and a little bit more today. But I really have to have it close well above 650. Probably a close above 677 to turn long-term bullish. Those are levels at which I would expect it to come up to maybe again and stop and go down. Next chart, live cattle. Oversold, almost support, not quite, didn't quite get there. Has a rally, but oh my God, this pattern has resulted 5 times now in the last couple of months. It's unbelievable. Start at the top with my sell signal, of course. Outside down day at the top, and that one, and that one, and that one, and well, that's not quite there. So what happened? Market broke a little support, came down some, bounced back to resistance, which was the previous lows. Dropped off, got oversold, came back up, came back to the previous lows, resistance, and turned down again. New lows, oversold again, came back up to the previous resistance only a few weeks earlier again, and did it again, and did it again, and did it again, and did it again. And guess what? We could do it again. This time we're going to come into the support area at 160, 161 to 160. And, well, what can I say? Maybe have another little rally. Trend is down. I don't see anything stopping this. It's what we would call a stair-step down market. Just keeps doing the same thing again and again. Now, hogs, good rally yesterday and today. I don't think it has much more steam to it. I would expect it to stop rallying at around 73, possibly a little higher, and turn down. Next, we got OJ. The head and shoulder top in OJ is still alive. We had a fake false breakout on Wednesday, popped up yesterday, but didn't, even with a little bit more strength today, damage the pattern. The timing is about right. The rally high is about right. All I have to do is close below that blue line. And it would be great if it was on a Friday today, but any day will do. And start to make on a closing basis new lows. Minimum downside objective 287. What do you look for if it's not going to work? Maybe another week or two sideways, because that is not in the cards. Maybe if it starts to rally up to 395 or higher, that is not good because there's too much time built into the shoulder now. The timing was just right on Wednesday and it topped out on Tuesday. The center of the circle was about my best educated guess as to where, and it topped out just a little bit lower than that. I can't help it. This is still looking pretty good. Right now, low and last. We'll see what happens by the end of the day and next week. Keep your eyes on it. Cocoa, no comment, really. Bull trend, to say the least. Maybe a little more correction, then try to make new highs again. Next is coffee. Pretty much the same comment, except the high in the coffee market was right there at a previous high of major importance, even though it recently broke above resistance and stayed there yesterday. And now it's kind of iffy and overbought still, implying a little bit more of a break. I'm thinking that yesterday's high might be pretty important, but I can't get a signal yet. Just an educated opinion that we could easily come down to 176. And I certainly can't rule out something in the 160 area. Next, sugar, oversold, should rally, doesn't want to. Best I can say, ready to go long, but I'm not getting a good signal yet, and I'm not getting what I want, where I want it, how I want it, and that's not happening. Next, cotton. Between a rock and a hard spot, slipping off to support again. We might bounce off of the support area again, just like it did before. And that's it, ladies and gentlemen. The E-mini at the moment is now down 2.25. So we're still down about the same as when I started this half-hour show. And the DIA, well, actually, yeah, it's been almost a half an hour, is just down a little bit. And the Qs are up about 2 points. So no real changes. I'll show you the charts real quick here on the 1 minute on the indexes. This is the daily. This is the daily 1 minute on the QQQs. We've rallied since the show started, almost exactly, and then started to slip a little, but not much. Good spot for it to stop, by the way. Maybe we're going to see new lows by the end of the day. I'm hoping. 1 minute DIA, sideways most of this morning, but hanging in there. It's slightly lower, not much. And let's get the 1 minute for the NASDAQ. Came down real good, bouncing a little bit. This is the March futures contract. So, of course, it's got the overnight. Bounced off a little support there. You have a great weekend. See you on Monday. Profitable trading to you.